before you all to welcome to this special program on emerging trends in Fintech and CBDC, which is organized by the Department of Banking Technology in association with Reserve Bank of India. So I now welcome all the esteemed guests, professors, officials of various banks, scholars and students. So with great pleasure, I would like to welcome our Honorable HOD, Dr. V. Mariyappan Sir, to give away the welcome address.
Very happy to see, despite heavy rains and unfriendly climate, I am very happy to see all of you in this auditorium. First of all, we are all assembled here for an important program for any student of management. We will be discussing about emerging trends in financial technology and central bank digital currency. Both are the latest initiatives of the Reserve Bank of India, and we have right away from the RBI senior officers to talk about this subject. And a lot of discussion is going on about central bank digital currency. A lot of confusions are also there in the minds of the students, how it is different from the regular digital applications that we are using offered by the banks. How central bank digital currency is different from the digital alternative channels that are offered by the banks across India. Similarly, Fintech is also growing, and most of the banks initially threatened by the Fintech products offered by Fintech companies, but later on come into terms with that and started partnering with the Fintech products and organization, because it is very important in strategy. Instead of looking somebody as an enemy, look at him as a partner and try to grow each other. That is the best way to go forward. So that way banks are also realized that Fintech is not really a threat to the banking institution. Therefore, they also started looking at that very positively. But indiscriminate growth of Fintech with less regulation also led to a lot of confusions and a lot of complaints from the users and the consumers. So ultimately, Reserve Bank of India, as the custodian of the financial system in India, it is their responsibility to see that all the stakeholders are taken care of and their interests are safeguarded. So that way, very recently, Reserve Bank of India has also started a separate department for Fintech, and very happy to say that the Fintech newly started department is now manned by one of our own alumni from banking technology. Right. So that way we are having two important guests from Reserve Bank of India. Before that, we will be listening to our leader of Pondicherry University, who inspire all of us and have been very supportive to all the right kind of initiatives taken by the university since his takeover as the Vice Chancellor. And he has got a very soft corner for Department of Banking Technology and very particular and in general for School of Management. Therefore, we have our Vice Chancellor. So on behalf of the Department of Banking Technology and on behalf of the School of Management, I welcome you, sir, for sparing your valuable time. And despite having a lot of assignment today, this program was finalized just 2 days before, and we just pulled down all our possible efforts and made this to happen. So that's why very short notice, we have also not able to reach out to large number of audience in the campus, but with whatever the time available, we were able to make it possible today this program to happen. Sir, on behalf of the entire team, I really happy to have you, and our students are eager to listen to you. Over the period, I think last 15-20 minutes, he has asked very serious questions to the RBI people, in the last 10-15 minutes of discussion informally we were making. I was wondering, a chemistry professor has got so deep knowledge, even sometimes we banking technology and banking people and the Reserve Bank of India has to crush their mind to answer some of the difficult questions he has asked. So thank you very much for not only making your presence available but also asking the pertinent and right questions so that this program will go forward. And there is no mention to talk about the Dean School of Management. Madam has been very, very kind and very supportive for all the efforts of our department, and she has got, in difficult times, she stood with the department in resolving some of the serious issues facing the department, and she has been guiding, she has been supportive, she has been helping us in very many ways, and happy to have Madam just landed after her tour today morning. She was surprised when we said we are going to have a meeting at 2 o'clock and 11 o'clock earlier. So suddenly it was a surprise for her. Madam, with a short notice, happy to have you with us and taking this program forward. I welcome on behalf of the Department of Banking Technology and students, scholars and faculty for this program. Thank you, Madam, for your presence here. Most importantly, today's program is going to rest on two important people, one of whom I already mentioned is Pride of Department of Banking Technology, who passed out in 2011, and first time the Reserve Bank of, maybe the last time also, the RBI came for a campus placement and took Mr. Murali, right, he is sitting here now. From an officer, he rose to the Deputy General Manager and heading the Fintech department. Fortunately, we also started MBA Fintech in the recent year 2020. 4 batches have gone out. So he is our proud alumni and happy to have him today on this occasion to and we are looking forward, and he is going to give you a very detailed discussion about the regulatory aspects of the Reserve Bank of India's perspective to put the Fintech applications. Many are coming left and right, and many of them are not getting regulated. So he is tasked with bringing out regulation for Fintech organization in the future forwards. Therefore, in future, any user will have a very complete peace of mind while using this product. So I welcome Mr. Murali Machala for this program, and thank you very much for sparing your valuable time and recollect your memory coming back to this campus and making us proud on this occasion. Thank you very much, Mr. Murali, for this occasion. I welcome on behalf of the Department of Banking Technology. And another guest we have, who is again Deputy General Manager from Reserve Bank of India, Mumbai. Another important initiative taken by the Reserve Bank of India is to introduce a central bank digital currency, because lot of discussion is going on, and because the custodian of the Reserve Bank as a custodian of Indian financial system, the most difficult part is to handling the economy. In the economy, there is lot of good things are happening and a lot of unpleasant things are also happening. One of that is the shadow economy. How many of you know about shadow economy? Google it, you will understand. There is to the real economy, there is also a equally shadow economy is practiced in India that eats away the real economic progress that we are making. And therefore, and that shadow economy is happening because many times we deal with the physical currency. Corruption is one of the greatest challenge the country is facing today. Like terrorism, corruption is the another difficult thing to deal with that. So to deal with this shadow economy, to deal with this corruption, to deal with the terrorism, because many times terrorists are funded by money collected illegally. So how to curb all these things? The one single medicine for all these things is the digital. Digital is the only thing that doesn't discriminate, that you cannot hide. So one of the reason for digital push for the government of India is to create a account for every Indian and bring digital currency to the system, thereby slowly doing away with the physical currency. That is the only solution to do away with all the ills of the economy. Therefore, in that respect, the latest initiative of the Reserve Bank of India is CDBC. So he is heading now the central bank digital currency, which is very important initiative. Sir, on behalf of the Department of Banking Technology, School of Management, I welcome Sri Sirin Kumar Sir, DGM, Reserve Bank of India, to join with us. And apart from that, another senior officer from Reserve Bank of India is also sitting here, Mr. Vinod Kumar, AGM. He earlier worked with payment and settlement at Chennai office. Now he is attached with the Mumbai office, dealing with Fintech as well as CDBC. So thank you very much for making your availability on this occasion. And apart from that, we also have joined by our Indian Bank Zonal Manager, available with a short notice. Thank you very much, sir, making your presence available. We also have DGM from Indian Overseas Bank, Sahu sir, is available here. So we have filled with a lot of, apart from that, we have faculty members of faculty, heads the department, and research scholars, and most importantly, the beneficiaries of today's special session, students across School of Management available. I welcome all of you on behalf of the Department of Banking Technology on this occasion. This next 1.5 hours discussion on these two topics definitely is going to be an enrichment, right? So you will have a lot of credit to your brain account today. After this 1.5 hours, you can debit it whenever you want it in future, right? So thank you very much, and I welcome all of you on this occasion and making it available for this program. Thank you very much.
Now, the School of Management is the proud of the Pondicherry University. It is one of the oldest and largest school and grown over the years consistently. It is our biggest school of Management, which is under Pondicherry University, with over 2,000 students enrolled, about 15 postgraduate and doctoral programs in recent years. And in recent years, it has shown phenomenal growth in terms of academic excellence, research expansion, and introduced innovative interdisciplinary programs under the NEP 2020 guidelines. So we have a leadership of a dynamic dean and mentor, Professor Malebika Dio. She is one of the few professors who have grown along with the university since its inception, and she has contributed immensely in the field of finance and commerce. Her research contribution and quality of publication is the testimony for her academic professionals, and she has also served as financial officer in charge at Pondicherry University, and besides that she has been member of various academic and administrative committees in the Pondicherry University. It is a pleasure to have such a leader in our school with us, and now I am very pleased to welcome our beloved Dean, Professor Malebika Dio, to deliver the felicitation address.
A very good afternoon to all present here. Respected Vice Chancellor, Pondicherry University, Professor K. Tharnikarasu, two DGMs of RBI, our special guests today, sitting on the dais, my colleague, Professor Mariappan, Head of the Department of Banking Technology, the top officials from IOB, Indian Bank, and other banks here, my colleagues from School of Management, from Department of International Business and Department of Economics and other departments, along with the banking technology, all the faculties of banking technology, and some of the enthusiasts to know about what is happening in the financial system, from Science Department, Madam Lata Shukla, and my dear students from School of Management and other departments, all guests. It's my proud privilege and of my happiness that I am standing before you representing the School of Management and also the Department of Banking Technology to invite two very important persons who can talk about what is happening in the financial system, the present day world where technology is in a horse galloping stage, where there is no looking back, there is no waiting, there is no stopping. If we stop, we are left behind. If we look back, we cannot proceed and compete. Hence, we are in a galloping stage, and Indian economy, being one of the largest economy, has very aptly taken up digitalization, and it has been recognized as one of the fastest country which has adopted digitalization next to China. Almost 87%, the growth is almost more than 87%. Of course, the digitalization which has given rise to the Fintech, as well as the digitalization which has made our country to think of a digital currency, are the topic of everybody's interest. Hence, the two top officials from RBI, the topmost regulator of the financial systems, are there to educate us about what are the pros, what are the cons, and what are the modalities of operations. And definitely there is lot of takeaway from these talks today. as we know that the Fintech has become the order of the day, and it is nothing but the mobile application and other technology created to improve and automate the traditional financial system. Of course, it improves, it supplements, it complements the financial system in terms of a range of financial services, not only the payments, receipts, deposits, it also helps in investment, wealth management, capital market operation, blockchain operations, etc., etc. A big this thing, whatever you name in financial services, it comes under this Fintech and under the digital currency. And of course, it has facilitated the financial system. I told you that it complements the financial system. At the same time, the hindsight of it has complicated the financial system a lot, because many people do not, though they use digitalization, they are the users of digitalization, but they are not knowledgeable, or they do not know how this digitalization happens and what are the intricacies of it. And without knowledge, when we use, if you give a blade to a monkey, it will not shave, it will cut. So it is like that. Once, without much knowledge, when we use these things, many a times, not sometimes, a big cut happens which frightens others. It is not that always there is a cut if you have a blade, but when it cuts deep. It doesn't show much on the top, but it goes deep. When we cut in a blade, you know how the cut is. Outside it looks just a scar, but it goes deep. Similarly, the scams that happens because of all these frightens. Hence, there is a need for regulation. As you know, these Fintech companies, Fintech institutions, different types of institutions which are involved in providing financial services digitally need to be regulated. There is a need for regulation. Hence, till now, they had come and mushroom growth was there. People have started adopting, people have started using, but relentless growth of this has made people to think over, and the regulators to think over how to regulate and how to make it to a system so that people will not be frightened. Now, if we want to be 100% digitalized, there is a need that people fearlessly should be able to use. It is not that always with an apprehensions. So there is a need for the making it systematic. And as you know, the cryptocurrency also is making big wave. People are also skeptic about use and misuse of cryptocurrency. That is the reason, again, the RBI has thought of, as already the head of the department was telling about the shadow economy, the corruptions, the terrorism, the dark aspect of the physical currency, uses of physical currency, digital currency had to come up. There is no other go. So how it will be used and how it will be regulated and how the modalities has to happen, they are also things to be known. As sometimes back when we were talking, there was a chat with these officers, we were telling that many things, many regulations are there in place. The government is thinking of bringing lot of regulations and lot of monitoring of these institutions. But unless people know, it is of no use. When there is a law, laws should be, people should know about the law, people should know about how to use and how to take rescue of or recourse of this law. That is also important. If law is there, but we do not know that these are the things in place, we just keep crying when we are in distress. So we need to know about what are the things that are there in these, and these are all emerging issues, emerging trends, emerging developments in the financial system. Hence, today is the very, very eventful day that we have two officers from RBI to talk about the fintech as well as the digital currency. I welcome you all, sir, and I'm very happy that Department of Banking Technology has taken lead to call these two people. It is not only for the financial technology, it is not only for the MBA fintech or MBA banking technology student, it is for the common man, because these are the things used by everybody. It is not specifically for maybe BT students may be getting a job because of this, but by knowing this, but it is for every common man. So I'm happy that they are there among us to talk about this. I congratulate the department and thank you very much for giving a place to talk about whatever I thought of. Thank you very much.
Thank you, ma'am, for your inspiring speech. You will be always a role model for all the students and the professors also. A leader is one who knows the way and goes the way and shows the way to get success. The success of any higher educational institution depends upon the visionary leadership and the leader's ability to think ahead of the time, besides inspiring and initiating innovative futuristic programs. We are fortunate to have such a leader with us to lead our university. The university initiated many new activities in the right direction under the leadership of our present Vice Chancellor, Professor K. Dharani Karsu sir, that resulted in expansion of activities in the campus. Besides a rejuvenated atmosphere, the university has also introduced diverse academic programs, including successful implementation of NEP 2020.
Respected Dean, Professor Malavika Dio, and Head of the Department, Professor V. Mariyappan, and today's special address speakers, Sri Shireen Kumar, DGM RBI Mumbai, who is going to talk about latest trends in central bank digital currency, and Sri Muralidhar Manchala, our alumni, who is going to talk about emerging trends in fintech, who is DGM, he is also DGM RBI in the field of fintech, and all the Vinod Kumar, AGM RBI, then IB Journal Manager, and IOB Regional Manager, and all the faculty members, students, scholars, and ladies and gentlemen, good afternoon everyone. So you can understand now how difficult to work with Professor V. Mariyappan. Suddenly he arranges and makes sure that students are there, and pulls me also here. It's good. Always he put me always very difficult situations. Not only this, so when he had a very tough situation for PhD admission, so I took much time and also in detailed discussion. So I think now it is resolved. Students are also joining now and taking this. So I can proudly say I played a vital role here, not to violate any rules. Without violating any rules, how best we can help the departments, because banking technology is a very unique program. So unique people need unique way to handle this situation. That's why we have handled that. Also benefited many departments, because in NEP we are going towards interdisciplinary. So this will pave a way for any department, any new program whenever we start. This how we are going to give degree for PhD degree for those type of students. This will be the very useful. So thanks to Professor Mariyappan. So another issue he came also, the BSMS, BTech MBA. No other department is proposing BTech MBA. So the interesting thing about the management is whatever the proposal give, they say yes, we'll do it. Whereas the science, arts, they say let me see whether we can have any workload increase, or whether teachers will support me, but I will be the as a HOD, I may be the unpopular HOD since I am starting the new course like this. Whereas this is the mindset of the humanities, social science, even science also. Whereas the good thing about management is whatever the new program, they will see the opportunity, not the issues related to this. So that's why they are, I always say, they are the people who lead the university, and with light in their hand. And anyway, they are of course they are business managers, so they are doing their job, but still it is university is benefited. If the management department is not there, I can say as I am 1 year I am managing, see, I have taken lot of help from this department, because in the other departments, if you go and ask any other other than teaching and research, so they have hesitation and they have to take care of their family. That very they are not ready to share their time, precious time for the university. Whereas it is always opposite when it comes to the management. So whenever there is it is running the university without the help of teachers is not difficult. Forming a committee, and even now, just today, our university was appointed as the nodal university, since ours is the central university. They attach 3 universities, neighboring universities like PTU, Annamalai University, and one more university as the state universities, who for them we are going to help them for implementing NEP. So Ministry of Education appointed our university as the nodal university for giving guidance to the university. So they asked us just 1 hour ago, they asked us appoint some nodal officer to do this, because they are going to convene a meeting on 19th. So we have to say what are the measures you are taking. We are discussing with those university how we are going to implement all those things. The moment the nodal officer, I asked whether please ask Professor Mariappan can help. So the moment I asked help, he said yes, I will do it. So if you go to another department, they will say no, I am busy, like this. So this is the thing I am telling. So like this, there are as being a central university, there are a lot of responsibility for us, and every time international universities and their vice chancellor or president, they come here and then they discuss with us, going for the MOU, all those things. It is a vibrant university. That's why more than 99 MOU we have, because it is not related to anything related to only teaching or research other than this. So there are many beneficiaries because of this. When the university is in the stage, whatever the stage you may be having, there is room for improvement. Whatever you have, it is not the ministry which gives everything. Ministry gives only money, direction, statutes, that's all. It is we are doing, and it is sheerly our teaching, non-teaching staff hard work, it has come to this stage. So I always say, if you spend 1 lakh rupees of government money, you have to work for the work which takes care of 1 lakh rupees. So whatever the work you are working for 1 lakh rupees to earn, same work you have to do the background work. That much work we have to do in the background. So if this building is there, so our officers would have worked for this. That is the way our university is here for more than 40 years. So in that aspect, I am just telling the management department. There are stories. I don't want to take much time. How management department formed, I used to get the stories, how they formed this management department, the first vice chancellor, all those things. So it is everything the pain. Same thing, the Professor Mariappan mentioned also the our honorable and respected Dean is retiring this month. So I am also equally pained and also what to say helpless, because she is helping university in many committees. So when it comes to the person who should be a woman professor, it has the more role. So we used to go to her and then tell her to help, and senior as well as woman, she used to help us. Very important committee like IC, so internal complaints committee, she is the chairman of this. IC is very difficult to handle. So any sexual harassment complaints, as per rule, it will directly go to her. It will not come to any of even the statutory officers. She used to handle directly and convene a meeting and take the decision and give it to us. So in a way, she was playing very positive role and helping the university. So we also feel handicapped when she retires this month. So I also take the opportunity to thank her and for this, whatever the help she has done. So let us not make her more emotional, feeling that she is going to retire. So this is actually, I feel this is the good development, and when anybody retires with this accomplishment, this is actually achievement, instead of seeing it as the, for us it is loss, for her it is a great achievement, work for the university, central university, and being work for the positively, and retiring as a dean is a great privilege, I feel. So in that way, I also take this opportunity to thank her. Now coming to this, the emerging trends of Fintech and CBDC, Professor Mariappan mentioned, I had a long discussion with both the special interest people. Those discussion I don't want to discuss because you feel confused. So you are all now settled for something, because my question was related to what is the role of rupee, correct? Why you are bringing the rupee where it is not playing a leveling field? So I always feel, bankers don't like this, but I always feel when something wrong security related happens in the area, then I always blame the police station. Police station is the responsibility of this. If something health related is not correct, that means that particular health center is not actively doing it. So they have to do the survey, make sure that all are healthy. That is the responsibility. If same thing, even the teacher, if somebody fails in the class, I feel it is the teacher responsibility. Why you are not taking the remedial class? That's why NRF also they give. If the outcome is less, that means your university is not performing well. Same thing when bankers, if non-performing asset is there, it is a banker's responsibility. It is the RBI responsibility. Why your rules are allowed for this? So if even Professor Mariappan is mentioning about shadow economy, so who is responsible for this? So it is the RBI's responsibility. That is the reason we were just discussion in between four wall. So we don't want to make you confused also. So we are here to discuss the positive things. It is about the emerging technology. So we can't avoid now the Fintech and CBDC, and how we are going to benefit out of this. So if you see this overall, the money always very difficult for the public to understand. Earlier it is only exchange of whatever the things I have. If somebody working in our home, I will give some things. They will take the things and then lead the life. But later on, the money introduced. Then this money always is always the how to use this, how to preserve this. So what is the role of bank here? What is the concept of interest, and what is the budget? All those things very difficult for the public to understand. So this is always there, but now it is going in the another direction where then technology also introduced in the bank, where it becomes more complicated for the public to understand. So in that way, your role is very important as a banking technology student, how we can take this to the public. Without understanding what is this, and you cannot take this to the public. So that is the reason here today they have arranged about the Fintech and CBDCs. I also discussed with the DGM RBI the difference between CBDC, and then you may be knowing it, but I don't know, I am a chemistry graduate. So what is the difference between CBDC, cryptocurrency, who is regulating cryptocurrency, and what is the advantage of CBDC, why CBDC is still anonymous, why not we make the name? So it is very easy, if you put name of CBDC, make it the more 50% should be CBDC in name, then shadow economy can easily be controlled, but why government is not doing it? All those things we discussed. Hopefully they will give the very good insight into the central bank digital currency as well as Fintech. So I thank Department of Banking Technology and Reserve Bank of India for jointly organizing this. Special thanks to Sri Srin Kumar and Sri Muralidhar Manchala for having agreed for this. I know they are a very important post, so they have to be there, but they took time in the working day. They took time here to come here all the way to Mumbai. Hopefully Murali there played major role here to come back here. So I thank Professor Mariappan and Professor Malavika Deo for arranging this wonderful talk for the students. I thank one and all for inviting me here. Thank you.
Thank you, sir, for your inspiring, enriching and thought-provoking inaugural address. Now, I take the privilege to introduce our chief guest and speakers of today's program. Mr. Srin Kumar, currently Deputy General Manager at Reserve Bank of India, is a banker with about 20 years of experience. He has completed his Masters in Management Studies in Systemic Risk course at the Yale School of Management. He has started his career as assistant manager in State Bank of India in the year 2002. He has joined Reserve Bank of India in July 2005. His specialization includes regulation or supervision of commercial banks in India and operations in financial markets as a treasury dealer. As a dealer in the Financial Markets Department of the RBI, he is involved in conducting monetary policy operations and carrying out foreign exchange intervention of the Reserve Bank of India. He is also a member of faculty at the Reserve Bank Staff College since April 2007, and currently he is heading the Department of Central Banking Digital Currency of Reserve Bank of India. Thank you, sir, for accepting our invitation and for your valuable presence. Next, Mr. Muralidhar Manchala is currently holding the role of Deputy General Manager at Reserve Bank of India, Mumbai, and sir has completed his MBA in our beloved university, Pondicherry University, and he has 13 years of experience in banking industry. He has joined RBI in 2011 as Assistant General Management at Hyderabad, and currently he is working as DGM heading the Fintech department in Reserve Bank of India, Mumbai. His specialization includes business intelligence, information security, service-oriented architecture, and payment systems. And Sir has also undergone various projects, for example, a study on financial systems for the poor and an analysis of payment system which include your RTGS, NIFT and mobile payment systems in IDRBT Hyderabad. Thank you, sir, for your acceptance and valuable presence. Now, I leave the floor to the guest speakers. So now it's your time, sir. You can start with your speech.
Good afternoon, everyone. Professor, Vice Chancellor Professor K. Dharanikarasu, Dean Dr. Malavika Deo ma'am, we had a felicitation shortly, and Professor V. Mariappan, HOD Banking Technology, School of, and all the deans and other senior professors of Pondicherry University, various departments, General Manager from Indian Bank, IOB, all the bankers who are present here, students and everybody who are associated with this, arranging this workshop. Thank you very much. I would like to thank the university, particularly Professor Mariappan and my colleague, Mr. Muralidhar, who is also alumni, for coordinating this and arranging for this session. It's a very, very important for us. And my team, Mr. Vinod, who is there for arranging from the banker side and all the activities we have done. So, I mean, it already feels like a big event actually today. We were thinking to have a knowledge session, but then it appears to be a very, very big event from that manner, and we had a lot of things already. Now we will come to the subject of the session today. To start with, I'll have on the CBDC, and then my friend Murli will cover related to fintech regulation and other things. Already there were some very tough questions which the Vice Chancellor has asked me while our discussion. He extracted the full money for the coffee which he gave it to me. But really I was very, very happy to know that, I mean, these are the basic questions, and it's a learning for me as well, that what are the issues which are happening from that level which sir is able to see. And it is very nice to know, and we need to come out with solutions for those things. Having said that, I will start with something which he asked me. For the audience, I'll ask you some questions and then probably start to answer those questions. So the first question I would like to ask you all is that how many of you have used cash, physical cash? All of you? How many of you have used digital money in some way, like for example internet banking, mobile banking, UPI or something? Again, all of you? So what is the difference? First, what is the difference between the digital, the cash which you have used, the bank note which you have used, and the bank money through internet, mobile or UPI? What is the difference between these two? Anyone, please come forward. Please be interactive. So, sorry? Oh, so you are highlighting the digital part, the physical and the digital part. Thank you, ma'am. Apart from that, what other things, because you all are the students, I think from the banking technology, I'm sure you understand these things. So what is the basic difference between the cash which we use on a daily basis, on an accounting basis, and the money, the internet banking, UPI or any other money which you use on an accounting basis? Just to drop you a hint. What is the difference? Sorry? Transaction data. Anonymity, you are saying, you are highlighting that the transaction data in what? Okay, so your data is getting recorded there, but when you are doing with the cash, it is not getting recorded. So there is an anonymity while using cash, is what you are saying. Okay. But on an accounting perspective, what is the difference? Sorry? Cost of printing the money. So in the cash there is more higher cost which is involved in printing the money. That's what you're trying to highlight. Okay, again I'll repeat. What is, on the accounting basis, what is the difference between these two forms of money? Yes, someone? So again I'll give you a further hint that the money which you use for internet banking, mobile banking, UPI, etc. is a liability of which entity? And the cash which you are using is a liability of which entity, and who guarantees that? Sorry? One of you can clearly, whoever is clear about this can just mention. Sorry? RBI governor's liability is, okay, so RBI governor's liability is the cash. What about the, okay. So what, so now let me not spend more time. So, so the physical cash which you use is represented in the Reserve Bank of India balance sheet as a liability. It's a RBI liability. RBI has issued that currency. It is guaranteed by the government, and it is mentioned in every note that that is issued by RBI, signed by the governor, and all those things are symbolic. But the important thing, it is a liability of, it's a promise, it's a guarantee of the central bank to provide you that equivalent amount of money. That is the liability. That piece of paper provides you that assurance, and on the basic accounting wise, it's a liability of the central bank. Whereas when you use the internet banking, UPI, mobile banking, etc. of a commercial bank, it is a liability of that particular commercial bank. It can be Indian Bank, it can be Indian Overseas Bank, it can be SBI, HDFC Bank, but it's a liability of that commercial bank. Now, if you understand the historical perspective which I was discussing with sir, so earlier there was a barter system, and then initially the currency could be exchanged at gold. So the central bank, in the initial days when the currency was getting developed, you could say that whatever the currency is there, you can go and exchange 1-to-1 with gold. It was linked to some percentage, some amount of gold, each unit of currency. But then over a period of time, it became a fiat currency, that it is not linked to gold. It just because people know about it, just because over a period of people got used to that, they know, they have the confidence that there is some authority behind this. It's a central bank or other entities which are there who ensures that this money will be given back. That's why they believed it, and then it's no more linked to gold, and that's how it's there. But it's guaranteed by the Reserve Bank, our Indian rupee. Whereas in case of the commercial bank money, it is the guarantee of that particular bank that is there. There are further complications which I will not go into, because then you have a DICGC guarantee. Deposit insurance is there. For example, up to 5 lakh rupees, whatever money you have in your bank account is guaranteed. There is an insurance which is available, but then there is a concept called oneness of money. You believe and take that money, use that money which is a commercial bank money, because you know that it will be converted 1-to-1 with the central bank money. It is converted. So that is the basic concept, and that is a difference between cash and a commercial bank money. I think I can discuss this because these are all MBA students who are discussing banking technology, because otherwise when we discuss with the general public, we straight away come to the point as to what is like at the high level, app level discussions. But these are some conceptual level discussions which I wanted to have it at the start. Now the second point which I would like to ask you, what is the difference? So now you know the difference between cash and the commercial bank money using either internet banking, mobile banking, or any other things. But then now you are aware, how many of you are aware that there is something called digital currency, central bank digital currency? How many of you are aware? Or rather, I would ask other way, how many of you are not aware that there is a central bank digital currency out there? Not aware, not aware. Can you raise your hands? Yeah, so there are some people who are not aware that there is a central bank digital currency. So let me tell you, the central bank digital currency pilot Pilot means that it is not a full and final launch. It is somewhat experimental. It was launched on the 1st November 2022. It was launched, the wholesale pilot, and the retail currency, what we are talking about, central bank digital currency, was launched on 1st December 2022. Almost 2 years have already passed, and there are various banks which are participating in the pilot. So there is a central bank digital currency which is there. The physical notes which you keep in your purse and wallet is now available in digital form also, and you can use your transactions. Now becomes the complicated part. When you are able to differentiate between the cash and the digital money of the banks, then the first part gets answered. But what about the digital money, the central bank digital currency, and the digital money of a commercial bank, UPI, internet banking, mobile banking? Now what is the difference between these two? Yeah. So on accounting basis, what is the difference? Accounting basis, what is the difference I just mentioned to you? So CBDC is a liability of RBI, just like physical cash, whereas a commercial bank is a liability of the concerned bank. Okay, that is one, but both are digital. Now next what? Next, what is the difference between these two? Okay, so that is a difficult question to answer, that what is the difference for the end user. For the end user, you will find that you will be able to transact digitally in the same way as you do with your other digital apps, UPI apps, to pay to a merchant, to pay to any other person. You are able to do, because the CBDC will appear to you as an app in which currency is stored in token form, and you can use it for making payment to a similar way. For the end user, it does not matter much. So from that point of view, let me make it clear. Then the question is, what is the use of CBDC? So the use of, when a central authority like a Reserve Bank as an apex body considers about the availability of various options, the payment options in the country. So over a period of time, a lot of steps have been taken, of course, from physical cash to central bank money to payment systems to UPI and whatnot. Now CBDC is considered as the next step in that evolution. So it provides an alternative way of making payment using central bank money. This is apart from what existing options which are available to make payments using internet banking, mobile banking, now UPI. So this is the next way. And the way it is different because of the technology it uses, it is possible to have some added benefits to this central bank digital currency. What are those? That is having something called programmability, something called offline functionality. So programmability means that you are able to put some features which defines the end use of that particular money when you transfer to someone. You put some end use stipulations, which merchant it can be spent, which category of merchants it can be spent, which geographical regions it can be spent, till what time period it can be used, after which it will return back. So these are the things. The programmability is possible using the CBDC. That is one. So now the government, we have now the PM Vidya Lakshmi. I don't know if you are aware, there is something called the PM Vidya Lakshmi scheme, which the government gives there's what you call the interest subvention for education loans. So for those students who are availing education loan for higher studies, the government gives a portion of the interest. So that is kind of subsidy, way of subsidizing that education loan, so that it's cheaper for the students up to certain amount, and that amount is normally given back to the banks. Now that the recent announcement, the PM Vidya Lakshmi scheme will be made using the CBDC. So there will be a Vidya Lakshmi portal in which you apply for a loan. When the government gives this money, the interest part of the money, subvention amount, it will be going to individuals, and they will accept it, redeem it. The money goes to the loan account. So that the individual is aware about this feature. They have got interest subvention from the government, which is a subsidy, and the banker is assured that all the claims are getting fulfilled. Otherwise, if the beneficiary does not accept the claim, does not process the claim, the money will go back to the government. So the leakage, somewhat leakage or over claim or under claim of all stakeholders is getting removed. Similarly, for various other schemes like PM Vishwakarma, in which the government gives loans to the artisans and other entities for, and there are end use stipulations. They have to use part of the money which the government has given for buying tools. Now that money can be programmed that out of this total amount, this much money you cannot spend anywhere else but in the group of shops which are classified as merchant category, which is classified as artisans. So this is one other example of end use. There are various other projects which are going on, which I will not discuss right now, but the various projects, the government, one major disbursement using CBDC by the government, Odisha government, happened in case of Subhadra Yojana. There is a Subhadra Yojana in the government of Odisha, which they give to women from 18 to 60 years, every half year 5,000 rupees. So the government used CBDC partly for these kind of transactions. So you can see that the programmability feature at the sponsor level. Now the corporates can also use the CBDC. Apart from the government, the corporates, even the university, when it is giving funds to the students which can be spent only for food purposes, coupons, they have to spend only for tuition fees or certain elements, it can be programmed and ensure that the money is used for the intended purposes. We have a use case in which a bank, I can name the bank also, SBI, came up with a tenant farmer use case. So the tenant farmers are those farmers who do not own land, but they get the land from the owners and do all the cultivation part themselves, but the land records are not there in their name. So they do not get the loans from the banks. Banks are reluctant to pass on the loan because they are not sure whether the end use will happen, not happen, and all. So then the SBI, discussed with us, and they launched this tenant farmer scheme in one or two states, Andhra Pradesh, Odisha, wherein the loans are given to tenant farmer using CBDC, which is ensuring end use stipulations. So these are just some of the examples. So the government, corporate, banks, all of them can use programmable CBDC. Now, user level programmability is also possible, in which you and me having a CBDC wallet, when I give a money to someone else, so that that person uses only for the specific purpose. Suppose if I give to my child and I want my child to have food or something and not other things. So I'm just saying, these are just possibilities, these are just examples. It's not the restrictions which are there. I'm just saying the possibilities. Now the use cases will get developed over a period of time. Like what kind of use cases, for example, when someone gives money to the driver should be using for FASTag only, not for any other purposes. So all those possibilities, user level programmability is possible. But these features are being tested separately. Right now, not available in the current apps. It will come. I'm just giving a sneak peek into what are the things which are being tested and what is going to come. Another important thing which is there is the offline functionality. So how do you transact digitally in a place where there is no internet, there is no telecom communication? So in such places, in the hinterlands, in the maybe in the northeast or far-flung areas, in the forest areas where there is no internet, how do you transact digitally? It should be ubiquitous. The money should be ubiquitous. It should be available everywhere, and people should be able to transact digitally. So that's why we are developing this offline functionality. So offline also there are different models. One is a proximity-based model. Proximity-based means that you bring the two devices together, and the money goes from one wallet to other. The money is stored in that mobile device, smart card, or whatever is that. There are various form factors like cards, wearables, or smartphones are the major things. Money can go from one wallet to another. It is like a physical cash. When you lose that money, gone. But then it is possible to transact digitally. Money goes from one device to other by using communication channels like NFC, near field communication. It's possible to have Bluetooth. It's possible to have other kinds of technologies to transfer this money from one wallet to another. So that is the proximity-based offline. Yeah. Advantage is that if the advantage you need to understand what is the advantage in transacting digitally and transacting in cash. When you have a by comparison, what I'm saying is that you have a physical cash right now, and you are able to do transaction. What happens if somebody steals your physical cash, or you lose your wallet somewhere? Do you get that money? You don't get. Still you are using cash. Why you are using? So the point is, there should be a way of doing a digital transaction also, but without having internet and mobile banking. There should be a way of doing things, because digital transactions are easier than cash transactions. Cash involves handling of cash, receiving of cash, storing it, moving it to bank account. It has got a cost at the business end, at the end of the bank, Reserve Bank printing cost is there, everything is there, all these costs are there. So digital way is considered to be superior to a cash. So we are trying to find a way in which where there is no internet also we can do these transactions. So one way is to have a technology like LoRa and other technologies which enables to have banking transactions even where regular internet is not there. That is one way. But if it is not possible to have internet, let us have that provision in which we can transact digitally even in such places. But then the downside is that when you treat the cash without an online database, without a central database, money is in your mobile, then the pitfalls. How do you verify that this money belongs to you unless it goes and gets recorded in a central database? So what I'm saying, please don't be scared, because this feature is still being tested, and we want to have the best possible technology and the policy mix and the convenience mix for the end user, such that there is some way of still getting the money if it is lost, but then some things which are not possible. So to have a technology, a secured technology, software and hardware which is cost effective. So high-end phones have a lot of security features in them, but low-end phones or cards, to have those security features which even in an offline kind of scenario is not will not allow that kind of a duplicate money to creep in or increase in value. That is the biggest challenge which is being faced the world over, and that is why the world over till now a fully unlimited amount of offline transaction service is not available for this reason. You understand? So this is the issue, very well pointed out. The issue is there. So those things are being addressed. It can be limited by having a software software as well as hardware secure elements technologically, and having those kind of safeguards in place there, and a technology which is less liable to get hacked. For example, NFC is more secure compared to a Bluetooth. So that is why the choice of NFC. Similarly, high-end phones with security features are much more secure. But can we bring a cost-effective way of having offline solutions? So what I'm trying to tell you is these provisions are being tested. It is not yet finalized. Some of the banks are doing that, but that is a plan. The idea is to have a CBDC just like a physical cash available at all corners of the country, available for all people, so that DBT or any kind of transactions which happen is available for all. There is another technology here also, non-proximity based solution, which still depends on the online kind of technology. So here with the SMS, some message will flow because internet is not there, but telecom network is there. So with the SMS, things can flow, validation can happen, and all that. So that is a non-proximity based solution that is also going on. So now, having just mentioned to you a bouquet of things which are CBDC, which are getting experimented and tested, right now what is available to you is P2P, person to person transaction, which is enabled in your digital rupee wallet. So for those of you who do not have a digital rupee wallet, you may not be able to appreciate so much what I am saying, but you can always download your digital rupee wallet. There are 16 banks right now which are a part of digital rupee pilot, and all the major banks are there. So here in your campus, Indian Bank is there, then you have the HDFC Bank, SBI, and all who are there. So all Federal Bank, all these banks are a part of our CBDC, and you can download the specific banks have specific apps. For example, you are a customer of, let us say, SBI or a Federal Bank, let us say. So you can go to a app store or a Play Store, and you can write digital rupee SBI, digital rupee Federal Bank, digital rupee Indian Bank, and you will get the app. You can download it, and for registration you have to use the last 6 digits of your ATM card, and then after registering it, you can load money from your bank account, you can load money from UPI linked account, and use it for all your transactions. Like you are using right now, if you are using a UPI app, any of the UPI app, Phone Pay, Google Pay or anything, you can use the digital rupee app in a similar way when you go and do a shopping, buy some food at the canteen, buy something anywhere by scanning the QR code. So the QR code is interoperable. It is not necessary that the QR code is of CBDC. All the QR codes except CBDC. So you can go, first you can load money in your digital rupee wallet, go and scan anywhere and make payment. Secondly, you can transfer money to your friend who is having a digital rupee wallet by putting the phone number. So these are the basic things which are similar to your UPI app, which you can also do with CBDC. So what I will request all of you is that there are quite a few people who are there in this room who did not hear about the CBDC, who did not hear about it. So you can, if you are a customer of any of the 16 banks which are there, you can download the app from the Play Store App Store. If you are using Android phone, Play Store, and then after doing a registration, you can go and do some transactions for yourself, test it out. In the coming period, you will have other functionalities coming in. You can test those also, give your valuable feedback to us, and we will be more than happy to incorporate any of your suggestions in that. Maybe you may face some issues initially while downloading it, registering it. It might so happen, but do let us know to the bank teams which are here. Do let us know to us, and we will make sure that those issues are resolved and you can download and use a digital rupee just like you use your banknotes. So I will stop here. And I'm ready to take any questions from all of you. Okay, these are the conceptual things, but one more thing I will mention to you is the progress in the pilot. So the retail pilot, which started in the 2022. Initially, we had just 4 banks in the pilot, and it was available only in 4 cities. So then, going forward, the number of banks got increased from 4 banks to now 16 banks, and the CBDC is available everywhere across the country because you can make payments everywhere. So, and the number of transactions, etc., got increased over a period of time. There is a lot of interest for DBT and other transactions, direct benefit transfers of the government, and all these improvements, the programmability. There are corporates, there are banks, there are government agencies, state government, central banks which are coming up, and these functionalities are being tested.
As Mariappan sir was telling, this was just crystallized just couple of days ago, this Tuesday to be precise. So, and then I asked him, sir, you had I think severe cyclone just a week ago. How is the university? So he said, as it's fine, not a problem, because and then I was just remembering that this university also withstood cyclone sometime in maybe 2005. So that is the resilience shown by the university, and that is seen here as well. Yes. So university has seen many such challenges and faced it with flying colors. And coming to today's topic, as it is very difficult for me to take because you are all already experts. In fact, our department is much younger than the Fintech course offered by the university. So the department was created to have a dedicated focus for the Fintech sector. Before moving on to the Fintech, I mean, you all know the nuances and all, but I just wanted to ask someone to define what is banking. I think this is one of the important things which I was taught during my MBA, but if someone can tell what is the definition of banking. So now we are all into fintechs, but definition of banking, I think you are not focused that much, is it? Business done by the bank. But what is the activity of banking? How do you define it? Lending and depositing money. Protecting others' money. Okay. Thank you for that. So from the banking definition of Banking Regulation Act, so banking is accepting deposits from public for the purpose of lending or investments payable on demand. So this payable on demand is a very important clause. So because these are to be paid back to the public or the people who have kept their monies. So what is Fintech now? So you are all doing Fintech course, banking technology course. So what is Fintech? Can anyone define? I think post-lunch food is taking effect now. So what is Fintech? Come on. How do you define Fintech? Given through physical mode, digital mode. Okay, good. So financial services given through physical mode, but then we also had it earlier also. We had mobile banking, internet banking. So why was it not called Fintech say 10 years ago? 20 years ago, ATMs were there for a long time. Mobile banking was there, internet banking was there. So why are we calling it Fintech? All right. See, Fintech is nothing but technology-enabled innovation in financial services to provide more business models, applications, processes and use cases. So any innovation you do in a financial services is called fintech. So like I said earlier, fintech, financial technology is there from a long time. So it was there since 1870 of course, as well. So there were credit cards, and then later on there is online banking, there is online fund transfer, RTGS, NEFT. So these were all there from a long time, but in the last recent past, say 10-15 years, there's a lot of innovation technology being piloted, being used. So in case of UPI, so UPI is provided by third party services on top of a digital public infrastructure. So what is a digital public infrastructure? UPI is a digital public infrastructure wherein the third party application service providers can use the service and provide services. So say Google doesn't have any banking license or payment license, PhonePe or any other entity doesn't require a license. So they are just using the infrastructure. So these are the innovations which are being piloted. CBDC is one such innovation. So so coming to fintech, I'll not cover about much more on that part, but I would like to say what steps RBI has been taken over the last few decades. So in fact you might be aware of IDRBT, right? So it is one of the subsidiary of RBI. I'm sure some of you might have visited or some of you might have done internship. So similar way we have also piloted NPCI, which has provided UPI, and then we recently have a Reserve Bank Innovation Hub. So what the Innovation Hub does is it will encourage innovation, collaborate with private players, fintechs or any other technology companies to provide and experiment on some of the services. It can be payments, it can be lending, it can be video verification, it can be KYC. So these are some of the things which can be done through the Innovation Hub. So in terms of regulation, one distinct thing for fintechs I want to say is fintechs are presently not regulated by Reserve Bank. Why it is not regulated? Because we feel that it is a sector which is growing and it is a sector which is innovating. So if you apply rules straight away, so they will feel stifled. So what approach we have taken is through a self-regulatory organization. So self-regulatory organization is nothing but set of rules defined or designed by the members themselves. So like in the university you have certain rules. So the university, the faculty members, the vice chancellor or the student representative or the student council will define set of rules which they think it is implementable for a small group of people. But if say government or any other entity advises rules, you will not feel that comfortable. And then there are lot of things which we may not know what happens in a closed environment or a small environment. So it is ideal that the rules or regulations or fair practices are defined by the members themselves. So that is why a self-regulatory organization approach was taken. So it gives an identity for the organization with the Reserve Bank to communicate and then also discuss the problem and not just the regulation. So they have other roles like developmental activities and then they can take different kinds of supports support in terms of legal, in terms of innovation or in terms of venture capital, in terms of collaborations, in terms of partnerships. So there are a lot of things which can happen through a network. So that is the path which the Reserve Bank has taken presently in terms of the fintech regulation. And another thing which the Reserve Bank is very clear as of now is fintechs cannot lend. So there is no public funds at risk now. So they cannot accept deposits or they cannot lend. So it is a lending and accepting deposits is a very sensitive function, and it will require lot of safeguards and compliances by the entities. So these are couple of things which I wanted to say about the regulation. And however, we take different approaches to learn regulation. So what the Reserve Bank looks at looks in terms of regulation is same activity, same regulation. So if someone is into a lending activity or associated with the lending activity, so they will also have to follow the rules which will apply to a entity which lends. So as a principle, we see that same activity we should have same regulation, and our approach is technology neutral. However, we are also starting to look at technology aspects as well, so which I'll come to it later. The other approaches which we have taken is controlled experiment approach. Controlled experiment approach is through we have a regulatory sandbox. So what a sandbox is, it is a closed environment where you can test certain products and services which the entity feels are not presently under the regulatory domain. So they will have to come on board with a regulated entity, say a bank or NBFC, and then say we want to test this product for a period of 6 months, 6 to 9 months, and if the results are positive, then what we will do is we will either try to provide a relaxation or modify our regulation as well. So in this way we encourage innovation. And other initiatives are through hackathon, like someone was telling he can modify the currency of a game, right? So similar way, at a larger scale, we encourage, we conduct RBI hackathons, which is called Harbinger. So now we are presently in the 3rd edition, where different entities, not just in India, all over the world can participate. And the prize money for the first prize is 40 lakh, and recently we also introduced an all-woman team first prize, which is at 20 lakhs. So hopefully we'll see some of you participate in it in few years once you are into your respective working life. And then in terms of innovations through technology, we also pilot what we call as RegTech and SupTech. So RegTech is regulatory technology, SupTech is supervisory technology. So in terms of supervisory technology is to use technology to help us supervise some of the rules which are being whether they are followed by the entities or not. So one of the projects which we are presently piloting is green lighting of financial apps. So as you know, you are using the Androids and iPhones. There are a lot of apps on the Play Store or Apple Store. So you don't know whether they are genuine or not. So how to identify that the app is providing a service which is licensed or regulated. So to identify such apps and see that no unscrupulous apps are being displayed on the stores. So we are piloting a project on green lighting of financial apps. And in terms of RegTech, there is a app we are trying to pilot, which is on greenwashing. So you all know Government of India has issued green bonds. So green bonds are the investments which are used only for activities which are carbon neutral, which help in increasing the achieving the green commitment of India. So there may be some divergence which happen. So in order to address these activities, we are piloting one of the greenwashing pilots. And then the other initiatives include digital banking units. So you all might be heard sometime in 2022, so that the government of India and Reserve Bank has piloted digital banking units. So these are fully digital units which will not require help of any bank employee. So you can go and transact, withdraw, deposit, or do any other banking activity in a digital branch. So the initial idea was 75 digital banking units in 75 districts of the country, and then later on, presently it's at 103 digital banking units. And then another project which we are trying to, which we are under pilot, similar to CBDC, is unified lending interface. So you all know presently for lending, each bank has its own system, each bank has its own assessment. So, and each bank uses different kinds of data. But what if the data service, data which are being gathered are centralized at one place, negotiated for the system as a whole. So you can have data such as milk pouring data, you can have irrigation data, you can have soil data, you can have crop data, you can have milk pouring data, you can have there are SHG groups, some of their products and services data. So, and you can have land record, you can have education, you can have various types of data. So once you have this, it will help the financial institutions to assess the asset profile of the customer as well, in addition to the income profile. So that is being presently piloted. Presently there are over 50 data service providers which we have integrated, and once it is scaled up, it will help the financial entities to get the information at a very cheaper cost, which will help credit delivery in a very frictionless manner, because once you have various types of data, it will help them to cater and design products and services which is suitable to the individual. And and when we are talking about data, there is another project which we are presently working on, is open finance. So in India, open finance is being implemented through account aggregator. So some of you might have heard what is account aggregator. Is aggregation of accounts. So it is not just a bank account, but you can aggregate information of your say investments, securities, stocks, pension, insurance, and then say credit cards, and then fixed deposits. So it will give a complete information about your financial profile. So what happens when you are trying to apply loan? So what generally a bank requires? Can someone say? When someone or individual or an entity applies a loan, what will bank look at? Credit score. Yeah. So to provide a credit score is one area, but to assess the individual, there are a lot of other things as well. So like I said earlier, there are investment, there are bank savings, there are insurance. So which will give a financial profile of what is the asset profile, what is the financial capability of that person. So with this, you can also design micro services or micro products and services, such as micro insurance, intelligent savings, or wealth management, personal financial management. So there are a lot of products and services which can happen through account aggregator architecture. So one important thing in the account aggregator architecture is data. So data is the customer is owner of the data, and the architecture provides that the data is used only with consent for a period of time which is defined by the customer himself. So and then the duration is also set by the customer. So that is one important aspect where the account aggregator architecture is managed through consent manager. So the consent to share the data is implemented by the account aggregator. So there are presently about 13 account aggregator, and there are already over 700 entities in the architecture. So there are financial information providers, it can be banks, NBFCs, and then account aggregator, and then financial information users. So it can be personal financial managers, it can be insurance companies, it can be wealth techs, it can be pension fund managers. So that is with respect to the account aggregator architecture. And then coming to, I think, crypto, my colleague had already shared you some of the concerns. In terms of crypto, the risk is it is not backed by any asset. So generally central bank currency, so someone was telling that on a rupee it is guaranteed by the governor. So it says I promise to pay a sum of rupees, and then there is a signature. So that is a written commitment, and there is a logical backing as well. So all the currency which is in circulation is backed by either gold or foreign securities. So it is not issued at the wish of the governor, right? So but for a crypto, it is not backed against anything. So the value which is the prices or the rates which you are seeing now, it is purely speculation. So it will create in the short term volatility, and there are consumer protection issues. So if there's some financial mishap happens, there's nowhere to go. So, and it can also, in terms of systemic issues, it can be used for money laundering, terrorist financing, market manipulations. So these are some of the concerns with the crypto assets. In terms of financial stability also, like someone were telling, how do you implement a monetary policy? So monetary policy can be implemented because we know the market has central bank backed money. But if there are funds which are not backed by the central bank, how do you get them implemented? So you can only control a signal for people who are on the road with the vehicles, but if people are trying to bypass through some other route, so it's very difficult to implement the monetary policy. So those are some of the concerns with respect to the crypto assets. So I'll stop here.
I would like to extend my heartfelt gratitude to our distinguished speaker, Shri Sirin Kumar, Deputy General Manager, RBI Mumbai, for sharing valuable insights on the latest trends in central bank digital currency. Shri Muralidhar Manchala, Deputy General Manager, RBI Mumbai, for his enlightening talk on the emerging trends in Fintech. Your words have inspired us and provided a fresh perspective on how technology is shaping the future of finance. A special thanks to Mr. Venkata Subramaniam, Zonal Manager, Indian Bank, Mr. Vinod Kumar, Assistant General Manager, RBI, Mr. Ravi Shankar Sahu, Deputy General Manager, IOB, for gracing this occasion with your presence. And also, I like to thank our Dean, School of Management, and special note of appreciation to our Head of the Department, Dr. V. Mariappan Sir, for his guidance and leadership in organizing this program. To all the faculty members of School of Management and students who contributed to making this event a success, thank you for your dedication and effort. Your teamwork and coordination have been commendable. Lastly, I thank each one of you, the audience, for your enthusiastic participation. Your presence and keen interest have added great value to today's discussion. As we conclude, let us take the knowledge gained today and use it to explore and innovate further in the fields of Fintech and CBDC. Thank you all and have a wonderful evening ahead.